Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 2nd of October, Bull versus Bear webinar. Steve Miley here on the call for trade day as ever. Welcome, everyone. Welcome. I'm going to get right into things in a minute. Just a quick heads up. I am sure all of you, most of you, would have seen that we had some kind of quite exciting announcements in here over the weekend. So if you didn't see those, where's the easiest way for me to show you? I don't even know where to show you, really. I guess we could go to our Twitter profile. Probably going to be the easiest thing to do. So we announced it on there. So basically new trading maximum drawdowns. If you're already on evaluation, you need to cancel and re-sign up to get these. So there you go. New end of day drawdowns, and we've got in here the 50% off now with code TMD50. So get the new drawdowns and get 50% off for the lifetime of the membership until you guys cancel. So take a look. Hope you like it. We had lots of very, 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 very positive feedback. If I can ask you guys to share in any groups you're in, Discord servers, all the rest of it, go and share it about. Tweet, whatever you do, spread it around via social media elsewhere, wherever you know other traders are. I think it's really putting us there up with everyone else, and I think we're doing a pretty good job overall. So have a look, and 50% off at the moment. Right, enough of the sales pitch. Let's get to the markets. So we had a lot of negatives. The markets had a lot of negatives thrown in it yesterday. Finished off the worst month so far of 2023, September. A couple of weeks ago, not last week, the week before, was the worst week, I think, since March. And we had the worst month since of the year so far, and to end off last week. Did get kind of tried to get a bit of a bounce going a couple of times, but really didn't get much going. And you had all these kind of negatives, so it's got it in the title, really. The shutdown fears were weighing last week. Obviously, that's changed now. Oil was up to nearly coming, zoning in on that $100 level, backed off from there. Yields were also surging higher. They dipped back lower. And then out of China, the woes from Evergrande. In here, all of these things stacking up against the markets. But obviously, since then, we have had the US government shutdown was avoided at the very last minute in here. So maybe that's going to help us out. Also, the US PCE inflation data that we had at the end of last week was better than expected. I was on CNBC. I don't know if you saw me last Friday. We had no webinar because I was on CNBC talking about the potential impact. And for me, the main thing, and I keep stressing this to you guys, what is the market that's affecting other markets? What is the dog that's wagging the tail? A lot of the time, the equities are the dog that's wagging the tail of the other markets. At the moment, it's very much yields. Everyone I speak to agrees on that, right? Yields are definitely what we need to follow. The treasury market. If the treasury market breaks important supports or important resistance levels, it's going to impact onto the stock indices. At the moment, the price are positively correlated at the moment. So lower bond prices equals higher bond yields equal lower stock prices. Okay, so bond prices down, stock prices down, bond prices up, bond stock indices up. There's a positive correlation. Maybe we're getting a turn in that risk off theme that we took from late September into early October. We did get that positive, better than expected US PCE inflation measure. We got the avoidance of the government shutdown. So that's two of the headwinds the market's been facing. But there is still a lot of concerns about higher rates, okay? And we'll talk about that. And that kind of brings us... So last week, indexes were down, global yields were higher, US treasuries hit multi-year highs before dipping back. Dollar index moved to another new multi-month high. Gold futures with the dollar strength plunged lower, and oil in here dipped after getting up, and eyeing on the Brent crude, nearly getting up to $100. And the WTI, the futures is based on that we look at, is broke above $95 at one point. So all of that was kind of quite negative for riskier assets. Going into this week, we've got on the central bank side, I'll come back to what we have today, but we've got two central banks in play. Obviously, a lot of the world's major central banks have already been performing over the last couple of weeks. Fed, ECB, Bank of England, etc. We do get the Reserve Bank of Australia and the Reserve Bank of New Zealand on Tuesday and Wednesday, respectively. Probably not going to have a big impact on any of the markets you guys are trading, but interesting to see how they are looking at markets now. Particularly as remember, these markets, these economies, the Australian economy and the New Zealand economy are very, very sensitive to the Chinese economy. If the Chinese economy is slowing, are the RBA, are the RBNZ going to start to shift to more dovish because of concerns of slowdown from China impacting negatively onto their economies? So that'll be interesting to watch. The main focus on the central bank side is going to be today. Powell is speaking later today, and we have a host of Fed speakers. I'll talk a little bit about that as we go forward. On the data side, the big focus Monday, Wednesday, Friday. Tuesday we get very, very little. Thursday we get very, very little. On Tuesday as well, to get the RBA. But today we have global data and US ISM data on the manufacturing side of the PMI. On Wednesday, we get the services and composite PMI from S&P Global for global, and also the US ISM. We also get US ADP employment change, that precursor to the employment report. And then on Friday, the employment report and also the Canadian employment report. So it's a busy week. Monday, Wednesday, Friday. We have the main data coming through this week. RBA, RBNZ Tuesday, Wednesday, Fed speakers today. That's from our weekly recap and outlook. You can get that, guys. I always pop it up into the forums anyway, but that is uploaded wherever when you're looking at this webinar, assuming you're looking at the webinar live, you're sitting in the trading room, just down to the right are these reports. Okay, you can get these just below where you're looking now on the right. These are uploaded over the weekend. So not only this report, but then everything I've spoken about there is then covered in far more depth in our macro matters. Okay, so these are kind of like the headlines, the week recap. If you want to get just a high level look, you can come here. If you want to delve a bit further and find out what's really going on, go into here. Look, you can see we've got quite a lot written on all the same subjects, but in more depth. Okay, so go take a look at that if you are so inclined. So going into so the other thing I didn't actually, I kind of missed this off. Should have put in here as well. It's Chinese Golden Week this week. Okay, so that kicked in from yesterday. Golden Week, markets closed in China and also elsewhere in Asia, but mostly China closed in here. So they've got a week off, so playing catch up a little bit in here. So Golden Week this week, China not open. So looking, so you can see that China National Day up here. We have had the European PMI data, manufacturing PMI data. You see here mostly in red. Mostly in green, not red, in green or black. Okay, so we had Swiss PMI beat, French PMI beat, German just missed. It wasn't a big miss though, only just missed. The Eurozone as a whole bang in line, UK beat. Okay, so generally speaking, European PMI data better than expected. Unemployment rate out of the Eurozone bang in line with expectations. So all of that kind of slightly positive. Going into the day, 9:45, so when we get this data, in the US, the S&P global data that is provided for the rest of the global markets, not as important as the ISM data from the US. So S&P global data comes out at 9:45 Eastern. 15 minutes later, we get the ISM manufacturing PMI. So we'll certainly be watching that. 9:45, then 10 o'clock Eastern. Moving forward into this afternoon, we get a host of Fed speakers. Powell is speaking at 11 a.m. Eastern. Also Harker, 1:30 Williams. And then Mester much later this evening at 7:30. And then we get that RBA overnight. I just was throw up in here the Fed speakers in here. Just wondering whether they're all speaking at the same place. So here we are here. So it seems odd they're all speaking at the same time. So what do we have in here? It's the second, right? There's nothing actually here. Look. Bar. October 23. That's where we are. Here's the second. It's not on here. So they're not listed for whatever reason. Not listed for whatever Powell is speaking, so I'm not sure where he's actually speaking. So that's interesting anyway. So it doesn't look like they're all speaking at the same place. What else have I got for you? So yeah, just overall in here, markets focused on all those headwinds that I've just gone through there. Obviously, the government shutdown has been avoided, so that's a positive. Futures mixed. Investors await more data and comments of Fed officials. So today's all about the Fed, really watching all those Fed officials, but also that data, that PMI data is important. Bond yields are back climbing higher, having dipped lower towards the end of last week. They're actually back higher. So you would have thought they would have been, would have taken the fact that we had. Excuse me. The fact that we had the government shutdown avoided, you would have thought that would have been a positive, and we would have moved to higher bond prices and maybe lower yields, but we haven't. So bond yields climbing back higher again. And so we're looking at the data in here, look at that PMI data, looking at Powell, looking at Harker, speaking later today. Why US recession is still likely and coming soon. This is more of the thought piece. I haven't actually got a chance to read this yet. So I'll put this, if you have got, you can get that on Bloomberg. Take a look at that. I'm going to go through that, but I haven't looked at that. Soft landing calls always precede recessions. Okay, so that's interesting to note. Okay, so what else do I have for you in here? Treasury yields climb after US deal. Focus now on rate hikes. 5 things to start your day. Just run through these. So US will still be on the rise, and according to Bloomberg Economics. So just from Bloomberg, Ukraine aid. Biden urging the McCarthy to follow up with funding for Ukraine. Office prices in the US. Futures bounced slightly after the government shutdown was avoided, and then going through what we've already gone through, what's coming up today. So nothing much in there. US bond market signals an end of an era in the year. The US market is calling a moment. The age of low interest rates inflation that began with the 2000 financial crisis has ended. What follows is unclear. Well, we're at 16-year highs. Clearly, that's over. That low interest environment is way over. Okay, don't know where that article is kind of all of a sudden relevant. October marks Philip as governments stay open. So obviously talking about the avoidance of the avoidance of the shutdown there from Reuters. So we've still got a month to the next meeting in here from the Fed. So this has dropped a little bit in here, but still above 70% for the next meeting to remain unchanged from the Fed tool. And if we go to end of year now, even though the Fed are telling us they're going to hike, it's getting closer to now, right? Only 55% chance of us staying unchanged. Why is this not scrolling up for me? It's not scrolling up though. There we go. So that's unchanged, 55%, 45% for a hike in here. And if you go to the end of next year, we're looking for rates to be notably lower. But if we look in here from here, we're looking for rates to be still unchanged by June from here. So the market's not pricing in a hike, still unchanged by June. It's till July till we get rates actually lower than where they are at the moment. Right, we're not there yet, but just to remind you, we are coming up to earnings season. So nothing on the calendar there for this week. Jump into next week, though, eventually. And you can see the end of next week, Friday the 13th. Friday the 13th of October, we kick off earnings season. Oh, is that a bad omen? In earnest with these large financials. So Friday the 13th is our first real big day. Do get a few before that. You can see PepsiCo, BlackRock next week, but nothing this week. So we're going to be focusing on that. Not this week. From next week towards the middle to the end of next week, we'll start focusing on the big companies and how they might impact the indices. And just a quick nod in here. Oops, wrong chart. Where are we? Over here. To the yield chart. So you can see having dipped back lower towards the end of last week. Thursday, Friday, we were back down in here. Market's rebounding and pushing back up new higher yield. So higher yield pressure is very much intact. And this is going to keep a cap on indices until we actually start to reverse. Now, we could easily reverse back lower. If you look here, it's trend line coming up through here. Don't use this system in here. So let's have a look. Never use this. So let's have a look at what it's not too bad to use. Don't know why it's going that way around, but let's say it's through there. So a push back down lower through like around 443 could signal a potential reversal. So it needs to go lowering yield through 443. A long way from that. It's not happening today probably, but maybe the next couple of days that could happen depending on what we get coming through. Let's take a look at markets overnight. Well, see Hang Seng. This is Asia close, so I think that's the back from Friday. So not too focused on Asia at the moment. European markets actually slightly lower. A quarter to 0.4 lower in here this morning, and stock futures in here this morning very slightly higher, right? Pretty much unchanged. I'm going to just do a really, really quick nod to the charts, and it will be very, very quick in here, guys. Oops, wrong one. Hold on. Oh no, that's the right one. So I'm just going to go on the dailies in here, and it'll be very, very quick. But it still looks vulnerable to me. I think really we've got to clear at least above Friday's high, and really these peaks over here. So this is the S&P. To me, it looks very vulnerable. Downside risk maybe back down to the lows here. The downside risk was like 4,300, and then maybe down towards 42.77 on the S&P. Really needs to clear Friday's peak, 71 and a quarter. And then that could aim us up to like 43.81, 82 area, but still looks negative for me. Here on the NASDAQ, similar kind of story. Actually, Friday looking a little bit more positive for the NASDAQ. Even though yields are pushing higher, you would have thought NASDAQ underperformed. So a little bit more positive. We did break above the resistance points in here, 14,945.50 area. Really, though, back above the 13 period EMA there, you can see that's coming in 15,030 at the moment. And then Friday's high is 15,060.75. So those are the two levels on the upside. For me, though, downside risk more towards like 14,750, maybe back down to 14,650 today into tomorrow. So still looking negative. But obviously we've got this data, two lots of data, just to finish off on the data. Any questions, throw them in, guys. But we're looking obviously 9:45, the S&P Global data, manufacturing PMI. But more importantly, doesn't usually do a lot ahead of the ISM manufacturing PMI at 10 o'clock Eastern, and then Powell is on at 11 o'clock Eastern. And then we also get Harker and Williams as well at 11 o'clock, and then 1:30 Eastern. All right, guys, I'm going to wrap it up there. Please do spread the word regarding the new programs, the better drawdowns, and also the 50% discount just this week. Remember that discount. If you are going to resubscribe, please do it this week. That will expire next Sunday the 8th. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another Bull versus Bear webinar tomorrow.